The market cap of the JSE is about 3 times the size of the South African GDP. I think one of the things, like with this whole Trump debacle that we've seen, people are saying, how's South Africa going to be affected?
Welcome to the very first episode of Breaking Down Markets. This is a show where we simplify complex financial concepts. We make it simple, we make it educative, we make it fun, and we strip away the jargon. My name is Sithole, and today I am joined by Maurice Madiba, Head of Primary Markets at the JSE, to talk about the JSE. I know you've heard this word before, but what does it mean? What is the JSE and what is it all about? So I'm not going to waste any further time, but I'm just going to introduce my guest. Thank you so much for joining us today. We truly appreciate it.
Thanks for having me.
Yeah. I've heard about the JSE, Botswana Stock Exchange, Nairobi Stock Exchange, for example. Why does a country need a stock exchange?
Yeah, I think it's a good point. I think the stock exchange serves as a barometer or a measurement of your economy, economic activity, a participant and a place for people to save their money. So one way or another, many citizens of a nation participate in the stock market. So it's either you're a direct shareholder, you've gone and opened an account and you've bought shares, or you invest in something like an insurance policy, whether it's life cover or something of that nature. They take your proceeds every month and then come and invest them at the stock market and generate a return. So when it's time to pay you out, they're able to do so. Or you're working and you've got a pension fund. Your pension fund, most of the assets are invested in companies listed in the stock exchange. So stock exchanges play a very critical role in terms of the capital formation within a country. So countries tend to have their own stock markets. Companies then tend to say, since there's a captive audience of investors, I'm going to take my company and list it on the stock market. So you'll find then the companies that are doing banking or your mobile phones or in industry, everything, they will come to the market and say, I'm going to list my shares in the market and sell them to whoever wants to buy them. And so that's the whole process of primary markets and capital formation. So how it becomes a good measure of the economy is people tend to say, how's the stock market growing?
Okay.
We've got GDP growth, which you'll probably find out about every 3 months, and it's 3 months in arrears, so you won't hear about it in real time.
Yeah.
Stock markets, in real time, you figure out how's the banking industry in South Africa. You look at the index, you look at the share prices, how have they moved? You can tell if it's doing well or it's doing poorly.
Okay.
I think one of the things, like with this whole Trump debacle that we've seen,
With the tariffs?
Okay. People are saying, how's South Africa going to be affected? But funny enough, our all-share index, which is a benchmark for all the listed companies, and it's hit an all-time high, so it's breached the 100,000 points, and now it's at about 105. And that's pretty good. So other than looking at the rand dollar exchange rate or rand pound exchange rate, you can look at the stock market index and get a good indicator of how the economy is performing.
Okay.
So for South Africa, I think it's done well. I think it's indicative of where the country is headed. We've managed to keep lights on, more revision in our GDP growth forecast. And now that's reflected in a strong stock market performance, which I think people can then easily participate in.
You just mentioned that, you mentioned about the listed companies on the JSE and so forth, but now let's talk about that. Recently we had listed companies like the names of Psilocybin, WeBuy Cars, Boxer, for example.
Yes.
What does it mean when a company lists on the JSE, and what does the process look like?
Yeah. So that's a good question, because we've had the opposite of what you've just mentioned for almost a decade and a half, where companies have been delisting, and we'll probably talk about that, but companies have been delisting, and for a number of reasons. But when a company chooses to list, it's choosing to say, I want to make my shares available to the public, for the public to trade. So We Buy Cars being, I think, one of the listings we had last year, one of the bigger listings. And it was a phenomenal story because it's two brothers. They started a business. They expanded. They started just with 3 cars, and now they sell 14,000 cars a month. We met with them and they explained their story to us. They would come and say, we have shareholders that have invested in us before, given us cash to expand, and maybe these shareholders want to now exit their shares. So in other words, they want to sell. So instead of selling to another person that they know or in the street, they would say, why don't we go sell it to the public? So We Buy Cars is such a recognizable brand in South Africa. They're already doing well. And it's surprising that they were never listed. So now they came to market, they issued their shares, they exited a part of their shareholder that wanted to reduce their shareholding, and then those shares were held by the South African public. And at November, end of last year, they had basically doubled their share price. So anyone who participated in that IPO or that listing, they managed to see their value increase by 100% in less than a year. So We Buy Cars is quite a strong example of what it means to go public and how the public also benefits from that. So it's a big brand, big business, recognizable, performed very well, entrepreneurial, etc. It's a South African story, to be honest. They were also looking at raising capital to expand. They bought the Dome during COVID, which some of us are unhappy about because it meant now concerts are far out from where we were. But then, they want to expand into other countries in the region. And that's what they're thinking about with money that they've raised at the JSE.
Okay, let's stay here on big brands. I'm just going to mention a couple of brands that are just going to come into my mind.
Sure.
Let's talk about Nando's, Batu, and Makosa brand. Why are these brands not listed on the JSE? And could they possibly be listed on the JSE in future?
I mean, that's a brilliant question. Nando's, we've been pursuing them to list. It's still very much a family-owned business. But they've now gone global. They've gone into the UK, they've gone into other parts of the world. And it's difficult to then convince them to say, can you allow the public to access your shares? Because perhaps the owner is still thinking about succession planning within his family, not necessarily thinking about floating the company and then being open to public scrutiny. Because once you go public, all of your business is in the media, if I can say it like that. Everybody knows everything about the business. Because you have to publish and report your results. You have to report your dealings if you're a shareholder or director and you sell your shares in the market. Some people look at it as you're losing confidence in the business and they may sell along with you, and that tanks the share price. If you're buying more shares, people may also see it as a vote of confidence and buy more with you. But all of this gets disclosed every single day to the public and is digested by thousands, hundreds of thousands of people, not only here, but abroad as well. So for some companies, that task of going to public can be a daunting one. And even though they meet all the criteria, you'd find that they're maybe not ready to enter the public array. So now here's another one, Batu Shoes you mentioned, which is interesting because, we've engaged with the founder quite a few times. We love the story. We think it will do well. If you think of Shoe Dog with Nike, and you read that book, in the first couple of chapters, you'll see that even Phil Knight had hesitancy in terms of listing in America. After Nike was established, such a well-known brand, but they were saying to themselves, well, should we list, should we not list, etc., etc. And they went through those deliberations. So I think Batu's at a similar stage. They're doing well. They would probably come to market and it will be a popular brand. And we would love to see it because then they compete with other brands within that industry. So within fashion and clothing, etc. So we'll see how that discussion progresses. But Some of the other businesses, just the task of being listed is a bit daunting, and they're saying, "Do I really want to take that leap? Am I ready to take that leap and have all of my business, like they say, aired in the public?" Yeah.
Lastly, if you had to speak to a 20-year-old graduate who doesn't know anything about the JSE, their financial literacy in terms of financial concepts is not up to par, or they just don't know where to go in terms of investing, and they just want to start, engaging more into financial concepts and understanding what this financial world is looking like, what would you say to them for them to understand or invite them to engage more with the financial world?
Sure.
Yeah.
It's a good question because if I kind of reflect on my journey, I studied accounting,
Okay.
and I worked in an investment bank, and I worked also in finance, and I worked in prime broking. But I never bought or traded a share directly with my own cash
Yeah.
until I was maybe like 25.
Sure.
So
Okay.
so I've been exposed to the market, and in fact, I even was part of the JSE investment challenge
Yeah.
in high school, but I only bought a share like 7 or so years later. So and I was in markets on a daily basis, which is, I shouldn't admit that, but it kind of gives you a sense of how there's a mismatch between people understanding that they can access the market, what it actually means, and then, just developing that knowledge or bridging that knowledge gap that exists. So, I would say the JSE Investment Challenge is a good start. It gives you access, and it's open to, I think, a grade 10 until first year varsity students. So thousands of students participate. JSE goes on a roadshow, and you get to log into an online platform. Then you get to see the market, and you get to buy shares. You're given like R1 million in a portfolio account, a dummy portfolio account.
Yeah.
And then you can buy a combination of shares. So that really helped. Just it helps to create a base, because sometimes to pay school fees in stock markets is actually to put some money behind a few companies that you have access to. So it's not easy to learn or to know, but there is certain procedures to follow if you want to. And I think the earlier you do it, the better it is for yourself. As one is to open an account to trade, and we generally call this a trading account. And then two is to fund it. So you just make a deposit, whether it's going to be $1,000, $500, or however much you've got disposable at the time. And then three is then on that platform, it will have a list of the shares that are available. And just to go do a Google search, or look at the share price, look at the performance, and then just buy. Um, I think that it's not as difficult as we think about. If you think of shopping for like a nice dress or a nice outfit, you'll take your time to go to different shops, see where is it cheaper here, where is it cheaper there, and just spending that kind of time with the information in the stock market will really help from a young age. But one of the other products that is available, which I think makes it easier if you don't want to pick, if you're like me and you say, I want to spend 10 minutes in the shop because I know I got to get bread, milk, eggs, and some juice. Then you can actually buy what we call exchange traded funds, or ETFs as for short.
Yeah.
And those are then representative of the whole market. So when you say JSE hit 100,000 points, you would buy a ETF that references an index that tracks the JSE and all the companies. And it makes it easier because if you were to buy Naspers, which I mentioned earlier, I mean, you need to pull out $4,000 just to buy one share.
Yeah.
So in an ETF, you get Naspers, you get MTN, you get Standard Bank, you get a whole variety of companies that are then added into that basket.
Okay.
So I think there's different products available at the exchange, but those three first steps, which are the most important, actually let me make it four. But
Okay.
open an account, fund the account, shop around, and then buy something.
Okay. You had that right. No, thank you so much. I think the
Yeah.
conversation of ETFs is something that we still need to break it down even more further.
Yeah.
I think you just, highlighted it, but we'll definitely have to revisit this conversation and talk about ETFs.
Yeah.
Well,
Wonderful.
thank you so much for joining us today.
Yeah.
And
Thank you for having me.
yeah, and this is where we leave it for the Breaking Down a Markets show. And this is your show, of course. If you want to talk about anything or want to break down any financial concepts that are just too much for you, the jargon you just don't understand, and you want us to break it down for you, definitely do comment down the comment section and we will break it down for you. Well, that's where we leave it until we see you next time, the next episode. Goodbye.